we don't waste much time. Right. So the most important thing when it comes to analysis, if you notice here I'm on the daily, the most important information is this one, right? This is important if I'm talking about the daily time frame. This is important because the market can use this information for the whole month or even for the next 2 months, just using this information that is here, forgetting about everything else that is to the left here, right? I'm not saying this is irrelevant, but I'm just saying this information that is here is the most relevant information, especially when it comes to the current market movement and what is currently happening. So what am I simply saying here? I'm simply saying if you look at what has been happening on gold, let me remove this. If you look at what has been happening on gold, right? If you look at what has been happening on gold since the bottom I'm referring to here, since October 2022, which was last year, right? So you can say that was the reversal point where it started going up, right? Then there, the top, you can see that it reached a resistance, right? That's so clear. Everyone can see that. That was a clear entry. This was a clear resistance entry. There was nothing fuzzy about that. Right. So now we are inside here. We are focusing on this range from here, which is 1615 to 2070 there. That is the current range that we are focusing on for this particular next coming weeks and the next even coming months. Right. So the most important thing is for you to understand order flow. Order flow, I'm referring to the market movement. Are we uptrending? Are we downtrending? Which are our zones? For example, here as we are going up, you need to identify, for example, this is a low, right? Swing low there, swing high, swing low, swing high. Right. So already I have drawn, you can actually see that we are in a bullish order flow market. Someone can also come and put let's see if ever we can have another high, right? This one, like this. So every high is a low. Every high is a low. Every high. So this high, the low of this high is the one now wanting to be created by whatever is happening. So this is a bullish order flow market. Here it was going down. This was bearish order flow, right? Bearish order flow. You can see that we had this high with the low, with the lower high. You can see we're going down nicely, right? Nicely, we're going down up until we reached there. We broke there, which is change of character, which was here, right? Change of character. We're now going up, right? We have seen that. That's the first major first point, right? So right now, if ever we're in a bullish order flow market, we're establishing higher highs and higher lows. So where is our higher low? It's here, right? That's a zone where the market, if ever it wants, it can even come all the way there, come all the way down there, test there, fail to break, then go up. That's a possibility, right? Then here the top, let me put this as my new high there. Let me just put this as my highest high there. That's the highest point that has gone to 2081 there. So this is the current range now. We're forgetting about this. It is not like we're forgotten, but I'm saying for now we are focusing on this zone. So long this zone is not broken, the market will play around in this. This is the current playground. This one here. This is the current playground. Forget about what is down. Forget about what is up. Focus on this playground here. Right. This playground, this is my higher high, higher low, higher high. So right now, whatever is happening in between here, this is what we call internal structure. This internal structure is happening in order to facilitate a higher low, right? That's the Like if ever you've been following our webinars, you realize that there's what we call the law of the path of least resistance. Path of least resistance, it means if ever the market has been going in a bullish order flow, right? The law of path of least resistance, it says the market will continue following that bullish order flow up until it breaks that, right? So it means if ever you find the market in a bullish order flow, according to the law of path of least resistance, your first bias should be a continuation of that bullish order flow. For example, here we're in a bullish order flow. Your first normal ordinary bias should just be a continuation of this bullish order flow. So in this case, what I'm currently seeing here, it can even come, create a higher low, even test this one, and come back and test that high. If it breaks there, it's good because it will continue with this bullish order flow. But if it fails there, it means we are stuck in something like a consolidation. What is a consolidation? It's when we are failing to establish higher highs, maintaining the same lows and the same highs, maintaining swing lows and swing highs. So it can even do that. It can even come here, bounce, go up, bounce, come down, bounce, up until it breaks maybe to the downside like this. So this can actually happen. There you will buy. If it rejects here, closes above here, that's a buy, instant buy. Target is all the way there. If it comes there, if it breaks there, you know that it's going to create a high. But if it rejects as well there, you know that it's simply forming a consolidation. We're currently in a consolidation. So now, remember this, I said this, the extreme target. Since we're coming down, right? Extreme target, where is the other target? You can see that there's a demand here. You can see a demand just above there, okay, which is also fine. So now, remember what I said when we are using Fibonacci, we target from the bottom to the top, we drag our Fibonacci. Bottom to the top. So from the bottom to the top, you realize that currently we are at 61.8. 61.8 is also a golden zone when it comes to Fibonacci. That's a point. But now we can see that there's an untapped demand that is there. We have an untapped demand, and around that demand, we also have other these ones. I don't really call them golden zones, but these are sniper zones. 88%, 88.6 and 78.6. These are sniper entry zones. These are sniper entry zones. 88.6 and 78.6. Those are sniper entry zones. The market comes there, comes in those zones, gives you a good rejection, get lower time frame confirmation. That would be a very beautiful entry there. So those ones are sniper entry zones. It can even come, but I'm expecting it to come all the way there. So on the daily, this is the current framework. This is the current analysis. So in other words, this is the analysis that you're focusing on gold right now. This is the analysis that you're focusing on. This is the, remember, I said this is the playground that you're focusing on. Here to the left, you can see that's a break of structure. You can draw it if you want, but personally, I can actually see by my eyes that that's a break of structure, right? Break of structure, we established the higher high. Now we are pulling back. Pulling back, first easy projection or first easy understanding is just this pullback is pulling back to create a higher low. Higher low where around this untapped demand it can come there. So now what is happening in between that high, that higher high, and that higher low? What is happening in between? This is what we call internal structure. So you mustn't be confused by internal structure to think that the market is now maybe coming down or overall going down, right? For example, if you see bearish order flow in between here in internal structure, if you see bearish order flow here, don't think that overall we are in bearish order flow. Know that externally we are still in a bullish order flow market. So do not allow internal structure or internal order flow to confuse you. So here, I've eliminated all the noise here. I've eliminated all the noise down here, and I told you we are focusing on this. This is the framework. Once you understand this, that you need to focus on this latest higher low and this latest higher high. That is your current playground. If it fails to break down here, it will go up. If it fails to break there, it will come down here to this region. So this is the current playground, right? So another thing, you can see also at the top we have in untapped supply there. We have an untapped supply, untapped demand. Right. So even just below here, you can also see that there's a lot of liquidity lying above, just below here. You can see these tops, these equal highs here. That's liquidity. Remember, liquidity, I said, is simply stop losses of retail traders. And if you find such a zone like that lying below an untapped supply or an untapped order block, know that they are going to use this as liquidity. They're going to use this zone. So what these equal highs, those are intentional equal highs. That's actually them generating liquidity there. So here they can even come and bounce and drop from there. If they don't drop from there, they will come and test that high all the way to the top there. Right. So we have our major zones. I've plotted my major zones on the daily. I have this one and that one. We also have that higher low, and that higher high there. I have also my Fibonacci levels there. They are so clear. Right. The daily, we are done. Nothing much more to talk about there. Right. So we go down to the 4 hour. Let me just hide this. Let me just hide this. Right. On the 4 hour, the only thing that you might want to do here is to refine the demand, which is this one. Right. You can see that that's the 4 hour demand there. So you can refine everything to there, or you can just leave this as it is and leave those two lines there as they are. Right. You can leave that as they are, like this one. You can leave them as they are, like this. Right. So you are targeting that demand. This one, you can see that it was mitigated. That one at the bottom. So now, this move coming down, right? Remember, I said it's a retracement of push, pull back, push, pull back. That's the flow. That's the flow of a bullish order flow market, right? Let's see here. So here I'll just leave it as it is there, like that. So now, as it will be coming down, remember I say it will be coming down in that pullback that I'm calling a pullback. It doesn't come down in a straight line. It comes down also following and respecting bearish order flow. Where is bearish order flow? Let's look at our internal structure. If you look at internal structure, this was where the latest breakout structure happened. So meaning this low here, that was where the change of character happened. Change of character there. Right. So that change of character, I want it to lead us to start to plot our internal structure. Our internal structure, let's label our internal structure. This was the previous low. That was the high there. The high is this one. That is there already. This was the low. So I want us to look at where is our next lower low according to internal structure. Where is our next lower low? Where is our next lower low according to internal structure? Where is our next lower low? Let's look at internal structure. So internal structure now, if you notice here, someone can call that a break. You can see a break came back, came down. Let me put my clear zones like this so that you're not confused. Right. So according to internal structure, I want us to follow internal structure. Remember, there is internal structure and there's also what we call sub-internal structure. There's internal structure and the sub-internal structure. If we follow both internal and sub-internal structure, you notice lower high, lower low, lower high. So from that lower high, we broke the lower low here, meaning where is our next lower low? Our next lower low will be that next. So here, you notice that sub-internal structure, it can always shift even from bearish to bullish. But now the internal structure, you realize that it hasn't even shifted. It's still maintaining the same order flow. Let me show you so here I said this is the low. This is the low. This was the previous low. Why was that the previous low? Here, we broke internal structure here. So meaning this was our high. And that low that breaks that high, that's our higher low. So that area, that's where the break happened. So where is our next lower low? Our next lower low, according to, let's look for the low that breaks internal structure. That breaks sub-internal structure. Here, sub-internal structure was broken here, internally. Sub-internal structure was broken there. Sub-internal structure was broken here, internally, right? So meaning, where is our, it's this one. Then that high, the highest point that will break that low there, here, that's our lower high there, internally, right? We go, we break. After we break here, let's look for the next low that is going to break internal, sub-internal order flow. Let's follow internal order flow. Lower high, lower low, lower high, lower low, lower high, lower low. Here we broke the lower high here. That break of that lower high, right? I want you to hear me and listen to me carefully here. The break here, someone can call this a change of character. This is not a change of character. It's only a, if you call it a minor change of character, you're correct. But if you call it a change of character, just a change of character, saying it's just a change of character, you're actually wrong, because at the end of the day, it's not really a change of character, because this market, this is the previous lower high, right? According to internal structure, this is the lower low, because it's the one that broke this sub-internal structure. If you notice, the market came back and failed to break here. This was a good selling. This is a sniper entry selling zone here. There where my line is here. This is a sniper entry selling zone. Why? Why is it a sniper entry selling zone? Because remember what I said, internal structure, for that pullback that we want on the daily to be done, for that pullback to be facilitated, internal structure must be bearish. It must be bearish up until it reaches that pullback. Let's say, I'm simply saying, let's say we are going up, higher low, higher high, right? Let's say our pullback must reach this demand here, right? This is external structure. This one will be your higher high, higher low, higher high. So what happens in between here? We have to, this pullback, for it to happen from that high up until it reaches the zone where it has to go up on. That movement coming down, that pullback, it must happen in form of bearish order flow, 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 up until we reach the zone. Then we break that bearish order flow. So that zone, how do you also know that a pullback has ended? This is the pullback, right? How do you know that my pullback has now ended? You know by the shift in internal order flow. This is internal order flow. When you see it shifting like here, you see that will be the change of character going up. When you see that internal order flow shifting, you know that my pullback has ended and we are now continuing to the upside to break structure up there. I hope you heard me correctly there. So here, this internal order flow, right? So long we haven't reached our final zone. For example, here, you can see that already we have a demand that we say the market can come back all the way to the demand, which is this demand. We defined it to this level according to the 4-hour. We said, if this market comes to this demand, right? If this market comes to this demand, the chances of the market bouncing up from that zone is high, right? So meaning this internal order flow, it must continue being bearish up until we reach our point of interest zone, which is this demand here or that low there, right? So meaning here, internal order flow was not supposed to be broken, which was here. This was the internal lower high. There you could have actually entered aggressively. Those are zones where I enter aggressively. Here, what I do, I simply wait for the market to come into the zone, like straight on the zone like that, right? It comes, it rejects, came again, rejected. So here, it coming and rejecting like that, you can actually see that internally, you can actually see that it created a form of a support, went back up. So here, it coming back up, you could have entered or you could have waited for the break of this support. Either way, you're actually going to make money. Entering there, where are you targeting? Entering there, by now you are still holding. Why are you still holding now? Because we are targeting this lower low, which is this one. So all this, what has been happening, that sub-internal structure, that is just a happening. This entry there was supposed to be like this. That's a swing trade there. Those are opportunities where you can actually enter aggressively. Those are opportunities where you can actually enter aggressively. So this liquidity, what, is going to be taken out after we've reached our pullback zone, which is around this one or this one. That's where you see it coming and taking out this. Once it takes out this, it can tap into this supply, give a pullback before a continuation up. But so far, so this is the internal structure. This is internal structure, and in between internal structure, there is sub-internal structure. Once you're able to separate external structure, internal structure, and sub-internal structure, once you're able to differentiate all of that, you will never find any problems making money in trading. You will never have any problems. Here, you could have ended there because of what I said. Someone could have come and drawn a trend line. That one, those are just extra entries. That's just an extra confluence, right? That's just an additional confluence. But us would have ended already there at the top there. These trend line breakouts and retest, what, these are just extra confluence. That was an extra confluence. Touch, breakout, retest. That was an extra confluence. Someone could have come and entered there, which is still fine because there you have quite a number of confluences. You see the rejection there. You also have a trend line breakout and retest. You can enter aggressively. Your stop loss above here or just above the candles there, like that. Enter. This is still a swing trade. You're still holding because you're expecting this to be taken out. Where are you really expecting? Expecting this first zone or the next zone, which is this one. So once you're able to differentiate internal structure and sub-internal structure, you will not have any problems. So now, even here after breaking, it can even give you a pullback. Something like this. After breaking, we got a pullback. This one, the only thing just that it pulled back all the way into the 100% zone there, right? Same here. It can even pull back into the 100%, but the chances of it repeating that same pattern they are slim. Sometimes it might not even come all the way to 100%. That's where you need to have your zones clearly drawn out like this. I can see that's an untapped supply there. That's an untapped supply. This supply was tapped. So what it can do, this movement can continue up until, so gold can even still continue selling. It can continue selling. It can continue selling. What I'm currently seeing right now, it can even continue selling up until it takes out this low, takes out that low. It can even continue selling, even coming into this region before a pullback up, right? So this is what we're currently predicting. We are expecting the low to be taken out. So gold, we are still expecting sales. I'm still looking forward for sales before any reversals like this, before the continuation down. So this reversal, you can simply use a Fibonacci if you want to notice, if you want to know how far it's gonna, how deep or how far it's gonna go down. You can simply use your Fibonacci retracement. You can touch there and connect on the zone where it's going to pull back on. Let's say it pulls back there or there or there or there or there, whichever zone it pulls back on. For example, here, let's actually see. Let me do a more logical prediction. Right, let me touch the top to the bottom around negative 27%. This is where it can bounce on, right? This is now just my own logical according to experience. according to experience and expertise. Right. So negative 27 there, that's where it can actually decide to bounce and reverse all the way up, right? Which is this zone. So if it reverses there, it means our new lower low will be that one created there, meaning we now have a lower high and a lower low, lower high and the lower high there. You drag all the way to the lower low, which is here. You see that once you do that, you notice that. So here you can even catch the, you can even enter the pullback. You can even enter the pullback. Once you enter the pullback, you enter using, so once you enter a pullback, you can also use the Fibonacci, these Fibonacci levels as your targets for that pullback. Remember what I said, we always sell in a premium zone. Premium zone is anything above 50%, meaning your first target is 61.8. These 38.2, 50%, you can use them simply to shift the stop loss to break even or to lock maximum profits, right? Then 61.8, you can first target, second target, 78.6, which is a sniper zone there. Then third target, 88.6. And around there, I can also see there's sort of like an order block there. There's sort of like an order block, but I'm not sure, was it tested or was it sort of like an order block? Because if it's like that now, this one can simply also be used as liquidity. This level can be used as liquidity. They know that the stop losses are just lying above there, so they can come down, go up, take out this liquidity, tap into the zone, then drop hard. So right now, we are simply expecting the low to be broken. Once the low is broken, all you want to see now is a shift in sub-internal order flow. Once you see a shift in sub-internal order flow, you know that we are now reversing. We are now pulling back. How far are we going to pull back? You simply use your Fibonacci retracement tool. Once you use your Fibonacci retracement tool, your first target is 61.8. Your next target is 78.6. Your third target is 88.6. Your final target is 100%, because sometimes it can even come all the way there, then drop. So this is my prediction right now. It's still continuing to drop down. Someone can even add their support and resistance, wara. It's okay. There's nothing wrong with this. It's still okay. There's nothing wrong with that. This is you can see the level, touch, broke is below. You see actually broke, retest. So it's actually dropping. That's actually a good even selling opportunity there. Very beautiful selling opportunity. You can see it's actually dropping nicely. It's actually dropping nicely there. You can even add extra confluence. Touch. That's an extra confluence. Here you can touch here. You can touch there. That's another confluence. You know that the breakout of that triangle is just you entering more cells. Breakout, retest, you continue up until we take out this low. Right? As I said, this is a logical prediction. This is negative. This is where negative 27% is. That's why I said I'm expecting most probably the reversal to happen to the upside. But so far, gold is dropping. So once it drops, once it drops and take out this lower low, expect a reversal to the upside anytime soon. So now, us coming from this lower high, when you are coming from a lower high targeting a lower low, don't expect any reversals going up. There's no going up here. We are going down. The direction is down. What you see are simply slight sub-internal retracements. Like if you notice sub-internal structure, break of structure, pull back, continuation. Break of structure, pull back here, continuation. Break of structure, pull back, continuation. Break of structure. So if you notice this, it never changed even this internal order flow. If you followed that internal order flow nicely, you're going to actually catch that all these cells, especially even all the way from the top, as well as these pullbacks ones, these pullback cells. From there, this first pullback, you target this low. After that low is broken, you expect the pullback. which was this one. After you take there, you expect the low to be broken. Once the low is taken out, you expect a pullback here, pullback here. You take that one, its low is broken, you expect the pullback here, pullback, its low is broken, you expect the pullback here. So you see, pullback. So now we're expecting this low to be taken out. Once it's taken out, we expect a pullback. So I think this one is it's a very clear trade. Very clear. I think this one is a very clear one. Very clear. Very clear. Are we together?
Clear.
Wonderful. So I hope we're going to make money out of this trade together. I hope we're going to make money out of this trade together. I'll be guiding you in the signals group.